that, in essence, is why everybody's standing around going, why is my quality of life not going up if I've gotten a bump in pay? Like, it doesn't feel like I'm keeping up. And part of the problem is, Ben, is that it's not just that your real wages aren't keeping up, meaning your wages that are adjusted for inflation, it's that they're lagging. So here you are paying this rent, paying this mortgage, paying this insurance, paying for gas, paying for food. You're doing all that because prices are going up, but your wages are lagging. So you're just trying to keep up. You're never keeping up. And so that's the biggest issue here. And that all comes back to why fiat money is just broken. It's broken because there's nothing anchoring it. They can just print it to oblivion, and they will, and they're going to continue to. And so this is going to go on in perpetuity, forever. High perpetual inflation forever. Your energy is being stolen from you. That's the problem. That's it. In essence, you can't have a way to store your energy, and it's infuriating, And even for a guy like me who's been on Wall Street for 30 years, Ben, I've heard these things and I've listened to it, and for decades I thought, 2% inflation, 2% inflation. I never really thought through just how perverse this was because, in my line of business, we were benefiting from it. Why? Because we're in investments. We're investing money, beating inflation. We're doing fine. But for the person who is focused on their business, focused on their job, focused on their family, they don't have time to go mess around with investments. It's not right, They want to just put their money away and store it properly, and they should be able to.
Ladies and gentlemen, I have a very special guest for you today. It has been quite a while since we've had a good old economics discussion looking at the big, broad world of money and finance and how everything's going on. In fact, we were just talking about this before we recorded. The last time I really did that was with my buddy Peruvian Bull on the very first episode. That was episode 1 of the show. And this gentleman, Mr. Lavish, shared the stage with him at the Bitcoin conference this year. So I got to see you guys up there talking about things together, and I thought, I need to bring James on. I've listened to quite a few of your podcast episodes in the past. I've read your excellent newsletter and followed your tweets. And it's excellent to have you here, James. Thank you so much for joining me today.
Well, thank you for having me, Ben. It's an honor. And first time I met Peruvian Bull was on stage at the Bitcoin conference. He was great, really smart guy, and
yes,
I'm happy to know him too. So
yeah, very good guy, and very important topics being discussed all around by all of these macro minds who find each other on Twitter and throw these ideas around. And just like you were talking about last night, talking about, the recent events of just things that different presidential candidates are promising and what they actually mean. We can get into that a bit later. But before we dive into that rabbit hole, I would love to hear your story because you have such a great one. I've heard it on Natalie Brunell's show and many others. So, James, tell me a tale of hockey, Wall Street, and Bitcoin.
It's a long tale. How much time you have?
All of it. We love stories
I'm a lot older
here.
than you. So, so my journey is it definitely, I've taken a circuitous route to this, path to Bitcoin. And I was a hockey player. I played hockey for Yale, which was it was a Division I sport, and it was pretty demanding. and to be honest, when I went to Yale, hockey is a little bit different than other sports like football and basketball. So before I went to Yale, I was drafted by the Boston Bruins and for the NHL, and so. I went to Yale and studied economics as kind of like a minor. They took away the dual major of econ poli sci while I was there, but I finished out in political science and thinking that maybe I'd go into law or something after hockey or become an agent or something like that. And so, but my senior year, everything's going great, and I have an agent. You couldn't really have an agent back then, but we had verbally spoken and kind of we're working things out and backdoors, just trying to see what what it looked like, and it was clear I was going to get a contract from Boston, and so as it happens, it's just a regular game at home, and I get a breakout pass from my defenseman. I'm going up the boards, and I take one step and my skate just goes into a kind of a groove in the ice and sticks there right at the same moment I got hit, and it blew out my knee. And so I tried to keep going. I was on the U.S. national team and the under 21 team, and for the trying out for the Olympics, and I was going to try to keep going with Boston, but it ended up I got kind of effectively traded over to New York to the Rangers, and then I wasn't there. So that leads me to New York, and I'm in New York, and I don't know what I'm going to do. I've got all these student loans. I'm not from a super wealthy family. My dad was brilliant. He was a nuclear engineer for Navy Nuclear, working for GE and Martin Marietta for many years, but they weren't paying them a lot of money. So we were firmly middle class. Anyway, so I had these loans, and I didn't know what I was going to do. I was sleeping on friends' sofas in New York, and kind of just bumping around trying to figure out, well, can I use my political science degree to go into law, or what can I do? And I got some offers to go work for some large law firms that were, at the time, they were entrenched in this massive battle over tobacco. And so they were legally representing tobacco. And, ethics and all that aside, it didn't seem like the right place for me to be. So I was bumming around on these guys' sofas trying to figure out what to do. And they said, "Look, you're good in math, right?" And I said, "Yeah." I had taken linear algebra. That's the class after BC calculus in high school. And so I did statistics and all that. And I was pretty, I was pretty good in math. So they said, "Why don't you check out what we do?" And so I got introduced to some people on Wall Street, some hockey players from Yale, from Princeton, from other colleges, some big state schools, and they were smart, really smart guys, and gals. And so I kind of got pulled into that world, and I got hired by a British investment bank to trade something called ADR arbitrage on the floor of the New York Stock Exchange. And that's where it all kind of began for me, the journey in finance. And so an ADR arbitrage, for your listeners, it's basically, the essence is you're trading foreign shares on the floor of the New York Stock Exchange. And there's an arbitrage there between where they're trading overseas and where they're trading here, between the currency and the taxes and putting them in a basket and all that. And so back in the day, we didn't have spreadsheets. We, had phones and a calculator, and my calculator was not even it wasn't as sophisticated as the HP12C here. I mean, it was just a regular big calculator with big buttons, because you were just doing it as fast as you could. And so that was the world I started in. And that got me into the world of hedge funds, doing that kind of two-sided arbitrage. And I eventually got picked up by a growing hedge fund in New York to do something similar on their desk. And so that's kind of where it started for me.
Awesome. So where did Bitcoin come in? Because what year was this roughly? Was this in the thousands or something?
Well, you probably have your audience is quite a bit younger than me, so I hesitate to say how exactly what you're. No.
Actually, I looked at my YouTube stats. 90% of my YouTube audience is over 45,
Excellent.
which blew my mind. Yeah.
No, this is I'm joking around. I'm not embarrassed by it. So that was in 1994, and I did that until about 1990. 1998 is when I got. 1996 is when I ended up joining this hedge fund in New York. 1995, 1996, and then I ended up going to Texas in 1998 to work for a rapidly growing hedge fund down there. All kinds of stories about market collapses, long-term capital management. We can talk about any of that stuff. The tech bubble, the great financial crisis. I lived through all of it on the hedge fund side. So Bitcoin, it didn't come into play until much later. Fast forward to 2017, and I've been in hedge funds for many years, and I've got some as a hedge fund investor, even as just a trader and a portfolio manager, you have your own investments too. They're not just in your fund. So when I had some stuff in private equity and my personal account, whatever, but I had an extra amount of money that I came into, and I was like, well, I want to do something a little bit different than I've been doing. I didn't want venture capital or private equity. I wanted something different. And so I kept hearing about this thing, Bitcoin, and I wasn't really sure about it. And, unfortunately, Ben, being in that world, and I still see this to this day, which is just astounding. But being in this world, I did what you typically would do, which is I went and asked the so-called experts about it. The guys who are running technology funds or portfolios, or the technology analysts, the tech analysts. The guys who are covering things like Apple and Microsoft and all that. So I asked them about it, and every single one of them said, "Oh no, there's no underlying value. It's a Ponzi scheme. It's going to zero. It's a tulip. It's a digital tulip. Don't put your money in it. You'll lose all of it. So just run the other direction." And so, thank God, they told me. I mean, it's actually, we joke about it, but at the time, what had happened is the price had run up all the way to just about $20,000, if I remember correctly, and then it came all the way back to $3,500. It was under $4,000. And I thought, there's something here. This market has collapsed, and there's still something here. Yet I was warded off it at $3,500, and so unfortunately, that could have been my first entry point, but it wasn't. I ignored it. I did the arrogant Wall Street thing and just thought, wow, these guys, this is just this is a high flying penny stock is basically what it is. I'm just going to ignore it. I'm going to go on to something much, much more, utilitarian. And so I invested in something else. It's a private equity investment. I won't even tell you what it is, but it's basically, I've had that money locked up all this time, and I have no idea what it's worth. And unfortunately, I have no clue. It could be a zero. It could be, 10x what it was, and you just have no clue. And, it is a technology related company. Unfortunately, you don't get a lot of information out of them. So it's probably a zero. Who knows? Unfortunately, and it's a shame, because if I put that money into Bitcoin at the time, I'd be a much happier person, much happier investor.
It's so funny how everyone, no matter what their level of financial experience or age or pretty much anything, we all just revert to the most primal human nature when Bitcoin comes into our lives the first time, and we say, "Oh, that sounds too good to be true. It's a scam. It's this or that." And practically nobody, except for an extremely small percentage of like real cypherpunks or real technical minds or Austrian economists, like 99% of people just brush it off. And then the price goes up a bunch, and then the real test comes. Are you willing to forgive your past self for making this mistake of not looking at harder when that weirdo friend told you about it the first time?
It's a great point, because I do see that. I see that a lot, where I have some very smart financial people that follow me and interact. I follow them to interact on Twitter with, in particular, X, and they're very smart, but they just can't get past this bubble thing. They can't get past this tulip thing. And they all of them, they just say, well, there's nothing to it. It doesn't, there's no inherent value. And I mean, you have to keep explaining it over, but you hit the nail on the head, which is, the Austrian economists get it immediately, because they understand how our money is broken. And it's so quick for them to get it. And so when I try to explain to people, when they ask me what I'm doing now, my old world, I'm sure they've been laughing at me, not as much now because I've gotten some attention on Twitter, but, um, you know, uh, they, I'm sure the ridicule ran hot for a while there. We'll see what happens in the next couple of years. But, um, you know, I can see these guys who are traditional investors, and when I try to explain to them, especially friends who don't understand finance, this is stuff we're just not taught. We weren't taught any of this in school. Forget high school. We're not taught this in college. You're not taught this stuff in your college level finance classes, business and finance classes. And so when you start explaining these things to people, they're like, "Oh my God, I have an MBA and I did not understand this stuff." I mean, that's just criminal. But then you get people saying, "Well, it's intentional. They're hiding it from you. They're just, they're oppressing you. They're suppressing information." It's not really that. It's more of there's no incentive to teach us about this. Why would you have incentive to teach us about how bad our money is? There's no incentive. Like, there's actually opposite incentive. And if you're on Wall Street and you work for a big bank, there's no incentive for you to understand what the wizard is doing behind the scenes too, because if they understand it, then they have value to you, and they're your go-between. They're like, "Oh, you just take care of your surgeries, Dr. Lavish. We'll invest your money for you. Okay, Dr. Ben, will just give me your money and a nice hefty fee, and I'll take care of it for you." There's incentive there, and so that's the problem. So when I try to start explaining to people why I'm in this, why I have such high conviction in it, it always comes back to the money and how it's broken,
I think that is a great place to sort of start here and painting this picture for people. Now that we've planted that seed, I don't think anyone who knows you and me knew that Bitcoin was going to be coming out there pretty quick as sort of the end game that we're getting to here. But I'd love to paint a picture for the folks out there who are still on the fence or maybe don't understand exactly why we are constantly talking about Bitcoin, why it's so important. And one of the things that you are always talking about that I think would be a good place to start is debt. What is debt? Like, why should people care about this? You put out a tweet just a few days ago, and for reference, anyone listening to this at whatever date, it's 2024, and the election season is running hot. Every politician's on TV promising this and that, and James tweeted a couple days ago, 35 trillion in debt plus another 218 trillion of unfunded liabilities, and not a peep from either candidate about it. And I sometimes just pull up the TV just in awe and just watch these people talk about these things, all these promises being made. No one ever talks about that debt, or if they do, they speak about it very vaguely, like, "Oh yeah, we're gonna deal with it, we're gonna fix it, and by the way, we're gonna spend all this money over here." So just contradicting themselves. So why don't we start with very basically, what is debt?
So I was trying to see if there's another post I had that talked about just the sheer amount of overhang here we have, and it is okay. So 1 year ago to get today, those unfunded liabilities were $192 trillion. Okay, or what works out to be $573,000 per person, per citizen in the U.S. Today, it's 218 trillion, which is 647,000 in just 1 year. It went from $573,000 per person in debt to 647,000. Okay, why does this matter? Well, let's step all the way back. The U.S. runs a deficit. You keep hearing about this. You hear about it over and over and over again. What does that mean? It basically means that the U.S. spends more money than it takes in revenues. The revenues are really taxes on our productivity. And so if the U.S. government was a company on the floor of the New York Stock Exchange, we would call it a zombie company. Why is that? Okay, let's walk through some simple math so people understand it. These are now the numbers I'm going to quote here are from the government themselves. This is from the Congressional Budget Office, who takes what Congress has passed in legislation and has put in their budget, and then they run the numbers to let everybody know what it looks like and what the projections are according to these budgets. Okay, so this year, 2024, which we're wrapping up here, we have an October fiscal period for the United States. So it goes from October to October. It doesn't go December to December. So this year, we're expected to have $28.5 trillion of GDP. Okay, that's gross domestic product for the entire country. It's our productivity. It's you making these videos and generating revenue for YouTube. YouTube declares that income, gives you some of it, and so that all equals out to be, like we add everybody, what everybody does up, it's $28.5 trillion worth of GDP. Off of that, we get tax revenues. The U.S. taxes us, so they create tax revenues for the government off of that, which is $4.9 trillion. Okay, so the $4.9 trillion is basically all the U.S. government has in revenue for its spending, right? Okay, so the problem here is that the government is spending $6.9 trillion. So you heard that. 4.9 minus 6.9 is negative $2 trillion. So it doesn't take a genius to understand that we have a problem here. It's a spending problem. So people say, okay, well, we need to just cut expenses, just cut some expenses and get it down to 4.9 trillion. Okay, let's talk through that. The issue here, and we're going to get to the zombie company comment here off of this, is that we have mandatory expenses that are $4.1 trillion. That's Social Security, Medicare, Medicaid. That they add up to $4.1 trillion. Then we've got defense spending. So those mandatory expenses, those are signed into legislation. If they don't pay those, they've tripped, the promise of legislation. They're going against the legislation of the United States government. So those are mandatory. You've got to pay those. Then you've got defense spending, which is not mandatory. They're discretionary expenses, but these are long-term contracts with huge defense companies that they're not going to not spend on defense. And so that amount this year is $950 billion that we know of. Okay, so add those up. Now you're at $5 trillion. You're already over budget. You're at about $5.1 trillion right there. Then you add in the expense on the debt, which is the interest on it. Okay, so if you think about it this way, we're operating in deficit. So every time a bond matures, we have to borrow more money. We have to issue another bond in order to pay off the maturity of that bond, right? So that's how it's working. But along the way, you still have to pay the interest on all those bonds. Well, that interest works out to be, we spend over $1.1 trillion in interest, but we get some of that back because of intergovernment debt. But let's call it's $900 billion this year is what's expected to be the net interest. So now you add up all those expenses that are mandatory. That's a mandatory expense, by the way, the interest, because that interest on that debt, if you don't pay that, you now have failed. You have a failed bond, and so you're basically you've defaulted. You've defaulted on your debt because you didn't pay the interest. So they're going to pay the interest. We'll get into how and why in a second, but basically the long and short of it is what you just heard was $4.1 trillion of mandatory expenses plus defense is $950 billion. Those are two things they're going to pay no matter what. You're already over budget. So that means you can't pay your interest expense unless you borrow more. So not only are you borrowing money to pay off the maturing debt, you're borrowing money to pay the interest on your current debt. And that is the textbook definition of a zombie company. It has to borrow to pay interest on its debt.
Yeah. So, and you always talk about the debt spiral. This is a big term that people throw around because, I mean, the way that I would sort of summarize that, and you could maybe add some color to this if it's too general. Basically, the government is paying off its overrun credit card debt by opening up a bunch of new credit cards and just opening up these new expenses everywhere. And
Yeah,
it's just a runaway freight train at this point.
yeah, it's kind of like the way I explain it. It's like it's a single parent, say you're a single parent and you've got your mandatory expenses, which is your house, your mortgage or your rent, your car, because you need a car to go to work, likely, unless you've lucked out to have 100% pay, work from home pay. But you've got your car, you've got gas, you got food for your kids, you got clothes that you've got to put on your kids' back, you got the taxes you have to pay so they can go to school, like these are mandatory expenses. So the problem is if you get into a situation where you need to borrow because you are not making enough money to pay those mandatory expenses, what do? You open up a credit card. Well, the credit card, you start making payments on that and you start making interest payments on that, and you're still running in a deficit. So what happens? You run up that credit card and you have to take out another credit card. And then eventually you take out another credit card. And eventually you're just paying off the interest from the last credit cards with new credit cards. And this is called a debt spiral. You can't get out of it. You just spiral lower, and eventually we saw it happen with Greece. Greece got into a debt spiral. They had to basically they took a write down on their debt, and then had a massive austerity program, cut expenses in order to get back in line with the EU. So that's basically what happened there. But we're seeing it happen in real time, here now. So people ask, okay, well, this is the United States government. Surely the dollar's not going to go to zero. It's not going to, we're not going to default. And that answer is right. We're not going to default on our debt because the United States issues debt in its own currency. So what it can do is just print more currency and buy its own debt and, monetize it to keep the charade going. We print money, buy the debt, keep going, print money, buy the debt, keep going. We saw it. We've seen it now in a couple of cycles here. We've printed money twice now, but we printed money once in the great financial crisis. Then we printed multiples of that in the COVID lockdowns. And so what happens the next time? They're going to print multiples of that. And so the issue here is what's the answer? And you hear the politicians talk about, well, we're going to cut spending. We're going to get everything in order. And they're not going to get everything in order. They're not going to cut spending. They're going to keep spending more than we take in. We are a deficit train right now, and it's not going to get any better. And so, why is that? Well, because if you have austerity, okay, that's cutting expenses for politicians' demographic. And they don't want to do that because it's literally political suicide to cut expenses for your demographic. You're not going to get reelected if you start cutting the handouts, So they won't do it. Neither party will do it. They try to trick each other into doing it, but they're not going to do it. So the second thing you could do is raise taxes. Well, I had a big tweet about that yesterday that actually blew up, and that was talking about, the idiocy of Kamala Harris's plan or proposal to have a 25% tax on unrealized gains. That's absolutely moronic. But the reality of that is that would cost, and even if it's only for people who are above $100 million of assets, it would wind up hitting small business. It would wind up hitting hedge funds. It would, you'd have a flight of capital that would crash the market, and everybody would hurt. People would lose jobs. Their 401ks would go down. It would be a disaster. It's an absolutely idiotic measure. And so you saw it happen in Norway. They tried to do the same thing, and instead of getting the expected $140 billion bump in taxes, they had like a $600 billion loss. So they decreased. But it's just stupid. Anyways, but just regular taxes. Let's just talk about regular income taxes. Well, when you raise taxes on individuals and companies, what happens is, well, there's less spending from individuals, which means there's less profits for companies. But for companies in particular, you start raising capital, you start raising corporate taxes. And what happens is research and development initiatives either get slowed down or shut down. Profitable business lines get slowed down. Barely profitable business lines turn into unprofitable business lines that get shut down. You have to start letting it go employees. You start lowering pay because you need to keep your margins to a place where they're profitable. It doesn't work. And so what winds up happening is that you have higher taxes on lower productivity and you get to the same spot, which is actually worse because your productivity is now declining. So you eventually get to a worse spot. So it doesn't work. It's not a good plan. So raising taxes is not really a good plan. The better plan is for the United States, the easy plan, let's put it this way. The easiest path is to just issue more debt, just borrow more like we're seeing them do. And in a pinch, you have to print some money to deal with it. That's great because what winds up happening is you create inflation. So why is that important? Well, inflation enables this whole charade to keep going. How? Well, because as you expand the money supply, you expand the amount of dollars that are out there. You expand nominal GDP, which is GDP that does not take into account inflation. So there's more dollars that are created. So that same bottle of milk or orange juice costs twice as much as it did 2 years ago. So there's more dollars in the system. Okay, just think about that. So when they tax you, they have a tax on that, it's a sales tax, or they tax the company on the profits of that. That's the corporate tax. They tax the employees for delivering that. That's a, income tax. So all of that money, it's just more money out there, but you're getting the same productivity. It's just in higher dollar terms. It's the same bottle of orange juice. It's just more dollars for it. So what does that mean? Well, that means when they tax that and they take that revenue and they go to pay off old debt, or they're using it for the interest of the debt, whatever it is, they have these programs, they're using more dollars for debt that they issued 5, 10, 20, 30 years ago, which is those dollars are worth not even close to what they were 20 or 30 years ago. They're just a fraction of it. So they're using the inflation to keep the charade going so that deficit isn't so large, because now they can issue debt. And so what if you issue, $100 billion worth of debt? That's nothing today compared to 20 years ago, So that devaluing of the dollar, it's a debasing of the dollar enables us to keep going. And that's the plan. They just keep doing it. So that, in essence, is why everybody's standing around going, why is my quality of life not going up if I've gotten a bump in pay? It doesn't feel like I'm keeping up. And part of the problem is, Ben, is that it's not just that your real wages aren't keeping up, meaning your wages that are adjusted for inflation, it's that they're lagging. So here you are paying this rent, paying this mortgage, paying this insurance, paying for gas, paying for food. You're doing all that because prices are going up, but your wages are lagging. So you're just trying to keep up. You're never keeping up. And so that's the biggest issue here. And that all comes back to why fiat money is just broken. It's broken because there's nothing anchoring it. They can just print it to oblivion, and they will, and they're going to continue to. And so this is going to go on in perpetuity, forever. High perpetual inflation forever.
So many great points there that I'd just like to highlight. The first one being, which I think is one of the most important things, is that the political red team, blue team doesn't matter. They're all going to do the same thing.
No, look at the debt. Look at the national debt, and it goes up every single president. It doesn't matter who's in control of the White House or the parties or of the branches of government. It's going up. It doesn't matter. It goes up under everybody. And there are always huge fights about it. So when I post these things, people are like, yeah, but what about the other party? I'm like, but both parties, like they're a uni party. I'm talking about one, just one idiotic plan that's being floated here, but they all do it. It's the system. The system is corrupt. The system is created in a way to keep you going and to steal your hard-earned energy away from you. You've put out this energy. You've earned money that, it's not like you're working. So, there's that old saying that you eat in a restaurant and you look down, you're like, oh my God, the bill, you're like, I can't pay this. And like, well, you can wash some dishes to pay it off. Well, that's a barter trade right there, right? Instant, done. You wash the dishes, you're done, you walk away. Go do it at the next restaurant. Well, this is different. This is where you're the cook or the dishwasher in the restaurant. You're doing it all day long, but you're not, you can't eat enough meals at that restaurant to pay you for all that work. So what do? They give you dollars for that. So you take those dollars and you're like, what do I want to do with these? Well, I can pay off my rent. I can pay off my, my gas and whatever. And if I have any left over, I want to save it. I've worked hard. That's energy turned into money. I want to save that for something future. Maybe I'm saving up for a new car. Maybe I'm saving up for a new house. So what do I do with that? I put it in the bank. Well, if you're not earning interest on that, that's above the amount of inflation that we have, your energy is being stolen from you. That's the problem. That's it. In essence, you can't have a way to store your energy, and it's infuriating, And even for a guy like me who's been on Wall Street for 30 years, Ben, I've heard these things and I've listened to it, and for decades I thought, yeah, 2% inflation, 2% inflation. I never really thought through just how perverse this was because, in my line of business, we were benefiting from it. Why? Because we're in investments. We're investing money, beating inflation. We're doing fine. But for the person who is focused on their business, focused on their job, focused on their family, they don't have time to go mess around with investments. It's not right, They want to just put their money away and store it properly, and they should be able to.
And this used to be achievable by anyone that simply saved in gold. Back when gold was our currency, when you get a gold coin as a kid from your grandma and you saved it your whole life, you could then pass it down to your child. It would be worth more. And that's because you can't print gold.
You could do that by rote. You could take your dollars and put them in gold and just, and it does perform pretty well, with inflation. But, assuming you use the inflation number that they report, but inflation's higher than that. You can't tell me that we've had 3% inflation from last year when you go to get your grocery bill and it's 10 or 15% more than last year, 20% more than last year, and it's 50 or 100% more than just few years ago, 2 or 3 years ago. So those numbers are manipulated a little bit to make sure that people retain confidence in the US dollar, because that's the most important thing for the Fed and the Treasury. We talk about the Fed mandate. And what is the Fed mandate? Well, it's a dual mandate. And the dual mandate says that they are supposed to ensure that we have stable pricing and maximum employment. Well, the stable pricing is the 2% target inflation target. Why? They can't, Powell was asked about on 60 Minutes at the early part of this year, and he gave some word salad answer that wasn't even the answer to the question. And so, because there is no answer, the answer basically is what they can get away with. I've heard people explain it that it used to be the expansion of the gold supply, so we want to keep up with that. Okay, maybe, but it came out of New Zealand, back in the 1980s. Remember, we got off the gold standard back in 1971 under Nixon. He took us fully off the gold standard, and then that was it. That meant the U.S. dollar was free floating against nothing, and so If you look at charts of inflation, the inflation just went straight up. It's parabolic since 1971, and that's because of that. So we became unanchored to anything. So that's the first mandate of the Fed, stable price. And the second mandate is maximum employment, which really there's no measure of that. It's just, let's make sure we don't have spikes in unemployment. Okay, so why is that important? Well, what's important is that first principles. The Fed is not there just to maintain 2% inflation and maximum employment. Those are outcomes of their policy that are there. Why? Well, it's not because they're such great people that they care about you and me, Ben. It's because they care about confidence in the US dollar and the ability for the US Treasury to keep issuing debt to pay for all the programs that Congress keeps putting down their throat. You can't blame the Treasury on this. Yes, the Treasury and Fed could have done a better job with the money printing this go around. Absolutely. The Fed could have done a better job of getting ahead of inflation this go around. Absolutely. But the reality is they're just the gatekeepers here of this policy that is inflationary. And they've got to do what they have to do in order to keep it going. And so the first principles is, for the Fed, the first principle is maintain confidence in the US dollar. Period. That's it. That's the point of it. What else are they trying to do? That's it. Don't have such hard recessions that we have unemployment spike, that we end up getting into a situation where markets crash and confidence in the US dollar drives people away from, or US assets drives people away from bonds. They need to have the ability to keep issuing debt. And if the bond market gets disrupted, dysfunctional because of people selling out of all assets across the board, that's a problem. They want to avoid that. So that's kind of that's the essence of it right there.
Yeah, and I would love to talk about the different positions of the different currencies around the world, the US dollar versus the peso versus the yen and all that soon. But real quick, just to wrap that up here, just to give people a real firm takeaway. I think when most people are sitting at home watching the TV, when they hear a politician say they're going to spend X $100 billion to fix X problem, most people will think either A, cool, I care about that problem, so I'm glad they're spending money on it, or B, meh, I don't really care about that problem, or maybe I just don't think that's a good use of money because it's the bad color team talking about it, and then I'll forget about it the next day or the next week. It kind of just slides off the brain that the TV's onto some new thing to make me angry. What should people be thinking when they hear these huge spending numbers just being haphazardly thrown around, regardless of what they think about the specific thing the government is going to be spending money on?
Yeah, it's a good question. And really, you hear politicians. So in that first debate, this was kind of laughable. So you asked earlier about the unfunded liabilities. What are those? Well, the unfunded liabilities, the vast majority of those are Social Security, Medicare, and Medicaid that are, that the government's going to owe everybody who's alive that is paying into those right now. And that means that there's $175 trillion worth of unfunded liabilities they have there that they don't have the money for. So, what's happening is basically you've got the boomers are retiring faster than they expected, and part of that is because of inflation. Their assets have boomed. You see, the memes about how the boomers are dancing, because the house that they bought for two grapes and
a
an
pack
acorn,
of peanuts.
yeah, for two grapes and an acorn is now worth $2 million. And so. And it is ridiculous, but they are retiring much faster than the government expected. That's one problem, okay. But another problem is that they just don't have enough. They're not getting enough pay-in to the Social Security program. So as boomers are retiring, they're taking early retirement. They're drawing money out of the system, and we're not having as much money paid into the system from Gen Z and millennials, Gen Z and younger, Gen Z. So the issue is that in somewhere in about 2033, the benefit fund it goes to zero. There's nothing left in it. And so what does that mean? That means that they have to borrow in order to fund retirees from there. So basically that fund is gone, and they're only covering 70% of what they owe from pay-ins right now. So that would mean that, when I retire, I'm going to get 70 cents on the dollar for what I'm supposed to get, which is far less than what I paid in, for sure, on the actual inflation numbers. And so it's just took my money from me. So what are they going to do? Well, politicians aren't going to let that happen. So they're going to find a way to close that gap by borrowing more money, And so, the ridiculous thing, going back to your question about what do you do when you hear politicians say, oh, we're going to raise taxes or whatever. Well, we heard one absolutely ridiculous, offer or plan from Biden when in that first debate.
I know where you're going with this. I love this.
He's like, we're gonna tax the billionaires, and that's gonna fix Social Security. We're gonna tax the billionaires. That's gonna fix. Okay, let's talk through that, because right now there's 741 billionaires in the U.S. Between them all, they've got $5.2 trillion. So we could take all of that. We could just take all of it, and we're still $167 trillion short. Absolutely ludicrous. It's a silly, stupid comment that it's not going to work. That's not the way you get there. So we have a structural issue with our spending, and what we need to be doing, Ben, is if we're going to spend this much money, we need to be spending on things that are productive. We need to be spending on things that are infrastructure, energy, building nuclear plants, building mini nuclear plants all over the country, using Bitcoin to enhance these. We can talk through how Bitcoin helps energy, because that is something that people do not understand. And once they do, they're, oh, I see, it helps energy grids. Well, I'm doing that in my hedge fund. We are actually invested in Bitcoin miners that are enabling green energy in areas that would otherwise be just shut down, because they're not profitable otherwise. So, but we need to be spending things on that. If we're spending on productivity rather than just wasting money, sending it out into the proxy war, ether, or, spending it on just ridiculous programs that nothing ever happens, it just gets put into people's pockets, things like the high-speed internet access. I mean, they've spent hundreds of billions of dollars on these stupid programs that nothing comes of it. So that's one of the problems, is that we need to spend on productivity. So you spend on productivity, you see things like in France, where they spent a bunch of money on nuclear power, and their productivity per citizen has gone, that is an excellent, curved line going up and to the right. Whereas you look at a place like Germany, and their productivity line per citizen is going down. Why? They're shutting down nuclear power. And nuclear is not the only thing. That's just one, way that you could spend money on on productivity. Good, spend money on energy. You can spend money on traditional energy as well, and make that more efficient. Refineries that we could be using here, rather than taking our light sweet crude and sending it overseas because we don't have the refineries to deal with it. Stuff like that. So, anyways, that's in essence, that's what you look at when you're looking at the spending and the problem.
People just need to really take seriously that phrase that there's no free lunch. Like, anytime you hear a politician say, oh, we're going to spend money on this, or we're going to run this program or do this or that, I mean, in my brain, what I am saying, I guess this would be my like super simple answer for people is just that in order to create these things, they don't actually create it. They're just printing money, stealing away everyone's wealth gradually by inflating the
Right.
currency, like you said, because when you print money, you're diluting everyone else's dollars. So that's why, when I go to buy a steak at the store, it's getting more and more expensive.
That's
That
right.
steak didn't get twice as valuable in the last 5 years. It's just that the money has
That's
been debased that much by the
exactly.
government printing and printing and printing. And this is my favorite graph that I send to everyone is just like you were talking about that line of spending just goes up and up and up, and it just goes blue, red, blue, red, blue, red. Line just keeps
Doesn't
going
matter.
straight up.
Doesn't matter. We
It
don't
doesn't
even have
matter.
we don't have a budget. We don't have a debt ceiling right now.
Yeah,
That's
which
gonna
is a
come, that's
total
gonna come
joke.
up again in January. We're gonna have this whole fight again about the debt ceiling.
Yeah,
So
the
um,
debt ceiling is hilarious. I think that's like one of the funniest parts of this whole thing is like just this made up. Oh, this is where we're going to stop, and every time we get there, we say, "Oh, we need to push it forward. We need to push it
it's
forward.
like
We need to push." How many times have they kicked the
it's like
can on that?
the debt ceiling is like those big fat cumulus clouds that you see as you take off in the plane. You just rip right through them, and then you're up in blue skies again.
Yeah, I
That's
mean,
what it's like.
it's just something that they literally use as sort of a narrative piece that doesn't have any actual meaning.
That's
So,
exactly right.
um, I mean, so many of those games, and like you said, this is all because of the fiat system where the government has complete control over the money supply and they can just print all the money they want for everything in a very centralized way. And the only people who make it up into that level of politics at this point are just the total psychopaths that don't really care about us, but they're really good actors.
Yeah,
They
most of
pretend that
them.
they care.
Most of them. We do have a few that really do care.
They're
One of them is
exceptions.
Senator Lummis, and I've
Hmm.
met her, and she's been advocating hard for Bitcoin. Well, why would she do that? Because she owns Bitcoin? She wants to talk up her own bags? No, she sees that we have a structural problem, and the only way we can really deal with it is to we're not going back to gold standards. It's just not going to happen. But we could add things like Bitcoin to the balance sheet, which would help anchor again. So we actually have something to anchor our treasuries to. Because if you're anchoring them to, and I'm not saying that they're going to suddenly go and say, okay, we're going to have a Bitcoin standard now for the U.S. dollar. That's not going to happen. But they could put Bitcoin on the treasury, on the balance sheet, in order to have something that's valuable that will keep up with the expansion of the money supply. In fact, it may surpass it because of the dynamics of global assets going into it. So, but that's it's an important distinction for people to understand, and that's why I talk about Bitcoin so much. It's because it's immutable, meaning it can't be changed. It can't be, the code can't be manipulated, and you double spend on it. Meaning I can't commit fraud in a transaction on it. Transactions they're immutable. It's decentralized, which creates that immutability. Like it's the only digital currency that's completely decentralized, like perfectly decentralized, with tens of thousands of nodes across the world, hundreds of thousands. And so that's the first thing. Immutable. Second thing, it's limited in supply, which is an incredible feature. There's only going to be 21 million Bitcoins ever. And they could be divided all the way up to 100 million pieces each, 100 million pennies of each of them, which means that everybody can use them, and it can store pretty much the value of the entire world in Bitcoin, in those 21 million coins. Each coin would be worth more. Each of those pennies would be worth more, but that's what it would be, and that's the point, is that as the dollar expands, Bitcoin goes up in price because it can buy more dollars. It's just as simple as that over the long period of time. It's super volatile right now because it's growing and it's maturing, just like gold did. You can watch gold in Weimar Germany Weimar Germany, where you see that chart of gold go up like this, but if you look at gold on a monthly chart, it's doing this on the way up. That's Bitcoin. It's doing the same thing, but it's doing that against all currencies. So, and that's the point.
Yeah, absolutely. And I'm going to pull back one more time here before we just go all in on Bitcoin discussion. A couple of things that you mentioned just a bit earlier. One of them was the Gen Z and millennials. I'd love to just take a second to talk about the situation for them, and then we can sort of transition that into why Bitcoin matters so much as a solution for the boat that they are in. Because I'm a millennial, I know lots of Gen Z folks out there, and we all have sort of a similar story where things seem to be getting harder and harder, and we talk to our boomer parents and when we try to explain, like, yeah, this is, it actually is getting harder for me to buy a house and to pay a rent and to eat good food. And it seems like these older generations feel that, these people are just, the young kids are just lazy these days. They're not, they worked so hard back in the old days, and now people are just lazy, and that's why they can't afford houses or anything. And I would love to hear your take on that sort of generational squabble that we have going on between the old and the young. Who do you think is correct? Who's incorrect? What are your thoughts?
Yeah, that's the really good question. There's a lot to unpack there, but I'll keep it to like high level, some simple stuff. First of all, my dad and most of the people I know who are boomers have some sort of pension. So they worked all their life, paid into a company, and with loyalty, and they were paid back with a pension. And so when they retire, they get this pension, which is however many thousands of dollars per month, plus Social Security, which is however many thousands of dollars a month. And then they've got their assets that they accumulated over the time, which you could do as a boomer and somewhat as a Gen X, along the way, if you were smart. Smart is not the right word. If you really paid attention to the finances that were going on around you, which is unfortunate you have to do, but for those who have, they've done okay. So that's one thing. So the pension, it's gone. I don't have a pension. Most Gen Xers don't have a pension because of what? Unless you were in the military or work for a school. I don't know of many companies who have pensions. There are a few, but not a lot. So that's number one. If you didn't get into a company that gave you stock, that stock exploded, well, that could have been a little bit of a pension, but there's not that many people who work for NVIDIA, who work for Apple and Google. Like there are millions of other jobs out there that have no access to that kind of payout. So that's one thing. The second thing is because of the expansion of the money supply since 1971, that has only accelerated in the last number of years. Those who did not own assets after 2008, or before 2008, those who did not own assets before 2008 got left behind. And then they got really left behind in 2020 when the money supply expanded so dramatically. If you take a chart that's Case-Shiller home index and plot it against M2, they follow each other, all the way up. And so that means that you had a big house that you bought for a grape, 2 grapes and a walnut, that house is now worth millions of dollars because the expansion of the money supply. So they kept up. They actually probably did better, and so they can't understand why just, pull up your bootstraps, work harder, kid. For what? The average price of a home is more than doubled in the last few years, and my pay hasn't. My pay hasn't kept up. And so if I haven't had enough money put away to keep up with that, I'm not going to get a house, and so it's unfortunate and it's frustrating. And I see it with millennials and Gen Z in particular, that, you know, it's normal for you to have a roommate when you get out of college to afford an urban apartment. I did it. You know, my wife did it. You know, you have to have a roommate because you are not making enough money yet to have your own house, to have your own apartment. That's okay. You have a roommate, maybe two roommates, whatever. But for Gen Z to work in places like New York or LA and have to have 8 roommates, 12 roommates, you know, in a little apartment, people sleeping on floors, that's ludicrous, you know? I mean, it's just not right. And so why are they doing that? Because they're trying to save money? No, just because they can't afford anything more, you know? So their wages haven't kept up. They didn't have assets. They got left behind. And here they are with housing prices, insurance prices, food prices, you know, price of education, everything is so high now that they're struggling to keep up. And it's real. It's not a fallacy. It's real. And so, and it's unfortunate. And, you know, that's why people like me are out there trying to fix that. I'm Gen X. I'm kind of caught in between. And I've got a lot of friends who are Gen X who have been caught off sides. And so I didn't, you know, I'm not retired in the Bahamas, you know, but I'm not Gen Z. So I'm somewhere in between.
Yeah, and I think one of the simplest charts or just numbers that I give people, and you probably remember the number. I'm terrible at remembering numbers. The wages over the decades have been completely flat, practically, like maybe barely going up, while the home prices are skyrocketing.
Yeah.
And
Exactly.
the prices of goods and services and food and essentials and energy is skyrocketing. And so we look at these things and we wonder, you know, why is it that houses are just exploding in price? And a big part of it is because, you know, the big money managers who want to save their money and hoard more wealth, and I don't mean that in a bad way. I mean, they just want to save their money like anyone would.
Well, the incentive is to make money on your money. That's
Yeah,
what the incentive
yeah.
is.
So they want to put their money somewhere where it's not going to get melted like an ice cube, which is what fiat currency is. So if they hold it in dollars, it's losing value over time. They know this. So they stuff all of it into the real estate,
Right.
which jacks the prices way up. So, I mean,
And
it's
not
just
to mention the Fed bought mortgage-backed securities to enable that as well. So you have that money supply expanded, gets into institutional investors' hands because, you know, they're close to the banks. Whoever's closest to the spigot gets the money. And so they're closest to the spigot. That's why you have Blackstone out there buying, you know, hundreds of billions of dollars worth of houses, you know, tens of billions of houses because they're closest to the spigot. And so that is absolutely part of it. And then people say, well, grocery stores are price gouging. So anybody who's listening to the rhetoric of the Democratic Party right now, trying to explain away this inflation. Now, again, inflation is constant. It's worse this period, this last 4 years, because just the sheer amount of money that was printed. But, you know, and I also, you know, there's political pressure to let the Fed, to keep the Fed from raising rates, to let the economy run a little bit hotter, and then, you know, force them to lower them quickly to let it, you know, to avoid a cool down. But this administration has to admit that the inflation has been out of control, so close to out of control. So it's not price gouging. I mean, we've done studies. I did a whole newsletter about it. It's not price gouging. It's not what it is, and price controls are not what is needed to fix it. Price controls only make things worse. But the farmers are not making a killing. They're barely getting by, especially with all the regulations put on them by this administration. It's ridiculous. The second thing is the food companies aren't making a bunch of money. You know, the grocers aren't making the cost of input has gone up for everybody because of labor is the biggest thing always. And then that's, you know, wages are going up in arrears, you know, not in arrears, in a lag. And so the companies, the grocers, like, you know, Kroger, they're running just a couple % margin. That has not changed. That's their net margin. It's not changed. So it's not their fault. It's just more money out there. It's inflation. That's what it is. Inflation means it's the expansion of the money supply. That's why there's inflation. That's why the food costs more. Not because, the Kroger and Smiths are greedy capitalists. They're not making any more money than they did before.
And not to mention the quality of all of these goods is going down, because when these producers are faced with this dilemma of, what do I do? Every single one of my inputs, like you said, is more expensive. All the materials I need is more expensive. They have to decide either just chop away their own margins or lose money from selling these things, or they're going to reduce the quality of it to save money and dilute it.
Do I put an organic, high quality ingredient in this, or do I just fill it with palm oil? Just fill it with palm oil, and it's just easier. It doesn't matter if it makes you sick. It sells the product for me, and
yeah, it's a huge mess, and this is really why we talk about the money so much, because that's the base of the entire mountain here. And when we hear these things like, oh, the corporation decided to get greedy all of a sudden, and it's just they just haven't. I mean, they're either lying or haven't done the research themselves. Yeah,
political noise.
Mm-hmm. So I think this would be a good chance to sort of walk through a few of these fallacies we've discussed today, and just kind of nip them in the bud as we go here, and we can finish off with the real solution that you and I both agree on. So let's start with, can we fix this by regulating the greedy corporations harder?
The greedy corporations are no. I mean, that's not it. That's not the issue. The issue is expansion of the money supply, and you've got to fix that first. So I did write a whole article about that, and we can link my newsletter in here. It's called The Informationist, and you can get a free trial to read the article. It's called Do Price Controls Work? And the short answer is no, but it walks through why and how basically when you do that, you lower margins by capping prices, and then what happens is exactly what you just said. The companies wind up creating things that are less quality, and eventually it gets to a point where they just can't make a profit on it, and they stop providing that good. The demand is still there, so you have shortage of goods, and then you wind up having empty shelves. I mean, when I went to grocery stores out in Cuba, I visited Cuba back in 2017, and when I went to groceries out there, literally a grocery store, it was like 3 or 4 bottles on a shelf with somebody behind a counter, and there was nothing there. I mean, there was just nothing there. There was no availability of anything. And so that's an extreme. Venezuela's seen that extreme. Argentina's seen that extreme. They've all seen it. They've experienced it. It's not what you want to do. So the short answer is no. That macro economics 101 does not work.
Okay. Number 2, can we fix this by taxing the rich harder?
Well, you heard my answer before. You have something that's called the Laffer curve, and there's debate about this, but the Laffer curve, basically what it says is that you have increasing productivity. As you increase taxes, you get to a point where the taxes are at the optimal point for productivity, where they reach some sort of nirvana, where productivity continues to be at the same spot, and you get the maximum amount of taxes. If you raise taxes, then productivity starts going down. So once you get over that Laffer curve, productivity starts going down. And so the answer is no, it doesn't really work. You're going to wind up having, same amount of taxes on lower productivity, and then the lower productivity is going to, cause you to have lower tax revenue in the future.
Okay, and quick tangent before we go to possible solution number 3. One of my favorite memes out there right now is the guy holding that sign that says, if they can just print money, then why am I paying taxes? I love that meme because it really gets people thinking.
Yeah.
That is kind of weird, isn't it? You know the numbers better than I do. The actual percentage of the money the government is taking in through taxes is just getting more and more meaningless, right? Because they're printing so many trillions of dollars. I'm a little bit surprised that no politicians come out and just said, we're just going to get rid of the taxes. Vote for me. Because it's becoming so negligible in that equation. Am I correct?
Yeah, but you can't do that because go back to the first principle of the Fed and the Treasury, which is to maintain confidence in the dollar. If you do that, the dollar hyperinflates overnight. Yeah, it doesn't matter that's the world reserve currency. If you declare that there's no limit to our printing, we're going to be Japan, then we're not even going to take taxes anymore. The charade is over. It just becomes a big joke, and so they lose. People will lose confidence pretty quickly in the dollar, and they will hyperinflate. Doesn't matter if it's the world reserve currency. Something else will become the world reserve currency, and in that situation like that, you may see Bitcoin become the world reserve currency overnight. So yeah, maybe let's root for that.
And I would say it's also just an optics thing. Like they need to continue taking taxes to make it seem like it's, you're helping build the roads and make people feel like they're part of this system. If they were to take that out, then too many people would start asking questions like, wait a minute, where is this money coming from?
Yeah, I agree.
And they don't want people asking that.
I agree. That's exactly what I think.
So can't fix it by regulating the greedy corporations harder. We can't fix it by taxing the rich harder. But James, surely we can fix this by voting harder, right?
Yeah, there's both parties they're the uniparty. They both spend recklessly, and that's not going to change. So the answer is no. That's not going to work either.
Easy. Already covered that one. So let's talk about Bitcoin. We've been teasing this one throughout the show. I think that this is, and you would agree, this is the best solution that we have out there for this problem of this reckless money printing going on, the lies being thrown around, people's life savings being debased away, and the younger generations, as we mentioned, aren't even able to save at all. Their money, like the second they get money, it's just dropping in value so fast they're unable to get basic essentials. So walk me through how having a sound money, and I know that you're also sort of a sound money advocate. You like Bitcoin, you're cool with gold and silver too, and I think it's good for people to understand that whole idea of sound money is a good thing. We're both huge fans of Bitcoin, but let's just talk about what happens to this big mess of an equation when you have a form of money that is scarce and cannot be printed. Tell me about the value of scarcity.
Yeah. So, I mean, look, we talked about the expanding money supply, and really for people who are new to Bitcoin and coming into it and understanding it, like I said, it's decentralized, it's immutable, it has a limited supply, it's easily transferable. These are all things that gold doesn't really have. Gold has a limited supply, but only in that it's limited to its price, that the incentive to go and mine more. But we don't know how much gold is out there, really. You know exactly how much Bitcoin is out there. Now, I like gold. So I advocate for people to protect themselves in these super, high inflationary environments by owning hard monies, gold, silver, Bitcoin. Silver is more of it does have a function of industry to it because it's used in things like solar panels and other. So that, gold has, it's less pure sound money than silver is less pure sound money than a gold or a Bitcoin. Bitcoin's the purest. And so what I advocate for is for people to start just saving some money in it. And, whatever it is, 1 or 2% of your savings, whatever that is, just start saving in Bitcoin. As you start learning about it, understanding it, and getting comfortable with it, then you'll understand why this is so important. And so, it's not just number go up, great investment. I mean, it has literally saved people in places like Lebanon and Egypt and Argentina and Venezuela, where they're trying to get out of either oppressive or super inflationary, oppressive regimes or super inflationary environments. Well, they don't care that Bitcoin is volatile because it's volatile on the way up, whereas their own currency is volatile on the way down, and it's going to zero. So their currency is going to zero against Bitcoin that's volatile, but it's going up. So they would rather have the volatility of Bitcoin, knowing that if they just wait a little while, it would be back up, as opposed to their own currency. And so, but I know people who have been able to flee those areas and keep virtually all of their accumulated wealth because they transferred into Bitcoin and they walked across the border with it. You try to do that with gold or US dollars and it'll be confiscated. You wouldn't even be like, if you had a few bars of gold, I mean, you got to hide it. Like it'll be confiscated. It'll be found out and it'll be gone. Whereas Bitcoin, you just walk across the border. You didn't take anything with you. It's all over the world. You're just going to connect to it in a different area. It's just, that's the beauty of it. And you can have access to it right away.
And we hear so many of these stories happening all the time. I know Alex Gladstein does a lot of work writing about this, sharing these stories by people who have escaped these terrible situations. And like you said, they don't have to carry anything with them. Way back in the day when people had to escape a really rough country, or even on a more micro level, just like women escaping domestic violence situations with a spouse.
I know somebody who did that.
Yeah.
I know somebody.
Yeah, and it's so profound that all you need to hold your Bitcoin is to just have 12 words in your head. You don't have to have anything physical. No one even needs to know you have it.
That's right.
It can be completely anonymous, and it's empowering these people so much. And
so that's why I encourage people who hear the U.S. centric, the North American centric, the message that's become a narrative of number go up. It's a great investment. Ignore the BlackRock, buy a little bit, whatever it is that you feel comfortable with, and go do some research on it. Now really get down into that rabbit hole of understanding exactly what it is and why it does have value. And all of these things that I named are the reason behind it. And compare that to the US dollar, which the only reason it has value is because people believe it does. That's it.
And our friend Greg Foss put it quite well. The U.S. dollar fiat currency is only the best crack house on Crack Street.
Greg has a way of putting things, doesn't he?
He has a way with words. But it's true. And I want to come back to that in a second. But really quick, just regarding the volatility you talked about, I had Vijay Boyapati on the show a little while back, and he explains the cycles of a new form of money coming in, how it's impossible to not have volatility when a new global reserve currency is taking over. It's never going to be a smooth process. It's going to be inherently messy. And you mentioned the gold chart in Weimar, Germany earlier. I'll put that up on the screen for people to see who are watching, but it's wild. This line is just all over the place. But like you said, it's moving in the upward direction because eventually the sound money wins.
Well, what happens is eventually there's enough money in the protocol that it can sustain the liquidity demands of people getting in and out. That's really all it is. And so you see that happening as it matures. I expect that to continue until at least gets to like $3, $4, $5 trillion. It's going to continue to be volatile like this.
Yeah, absolutely. And I have two final questions for you, James. The first one is, you mentioned these situations like Argentina, Venezuela, these stories we hear about, these really bad inflationary events where, the money is just debasing so quickly in Venezuela that you just see cash on the street. It's just trash. It's just toilet paper to them. They have to take a wheelbarrow to the store to get a meal.
Yeah.
And it's just completely run off the rails. A lot of people in the U.S. and other Western countries, specifically the U.S., though, because we have the global reserve currency, we have the huge benefit there. We think, that could never happen to us. We're the USA, baby. We rule the world. That could never happen here. What do you think about that? Do you think that maybe people should be paying a little bit more attention, even though we do have this perceived, better position versus other countries?
Yeah, and I agree that number one, it absolutely can and will happen, but it will not happen tomorrow or the day after. This for the U.S., you're going to see a lot of other currencies around the world collapse first. You're seeing you've seen cracks in the armor of the yen the last number of months, when people lose when they lose faith in a currency, lose confidence in it, then it hyperinflates basically, and so. And that will happen in the United States eventually. I don't think this is not in the next 2 to 5 years. This is like multi-decade process, I believe. It can absolutely happen. Why do I know that can happen? Well, because anybody who's done research and understands exactly what I was talking about with the debt and the debt spiral that we were discussing before. This is not new, and the Treasury knows it, and they have even said it themselves, and they've put out reports that are called an unsustainable fiscal path because they understand this is not sustainable. They're making a plea. They're begging Congress to shape up because they can't keep this going on forever, and they know it. And so unless something changes, unless we have some sort of massive productivity miracle out of AI that is definitely possible, we're on a path to hyperinflation here, in the next 20 to 50 years.
Yeah, and it's things are so unprecedented in so many ways. It's none of us can predict when exactly it'll happen.
I don't try to.
Yeah, I personally predict it happens a little bit faster. I think my buddy Peruvian Bull probably does too. I think we think that maybe it's going to get away from us quicker, but I mean, we're all just watching a show. Like all you can do is sit back and sort of just tweet about it and post memes to stay happy.
Yeah, I mean,
as things fall apart.
We could have a massive, catastrophic global unrest that caused it to happen in the matter of weeks, but who knows? I don't expect that. Let's put it that way.
Yeah. I mean, we'll just have to wait and see on that. It's a tough situation to map because fiat is so inherently convoluted and complicated that they can just make up new rules whenever they want, and it's impossible to gauge this thing. It's a full-time job, like you said, to try to figure out how much it's going to cost to buy basic goods and services next year, which, and you mentioned this a couple of times, how ridiculous it is that the average person just trying to feed themselves and their family has to be a part-time investor now and follow all these macroeconomic trends to figure out what's going on.
Exactly.
Because they can't just save their money.
Exactly.
And this is what Bitcoin does for people. It gives people the ability to save in something that's not being inflated. It can't be inflated past 21 million. It has a hard cap. So it can't be diluted and printed. And that's such a big deal for people to understand. So I would like to hear your vision for this word that we like to throw around, hyper-Bitcoinization, sort of bringing it all together. How we've got this inflationary mess of a fiat currency system where the dollar just continues going down. Every single fiat currency is going down. They're all sinking ships, just at different speeds. We have tons of unrest right now. The politics metronome is just slamming every direction. Every term is like people just get angry and are angrier and angrier at the other team, and the trust in authority all-time lows. People can't afford to eat. That's kind of an issue. So everything just seems to be going bonkers right now, and we seem to be approaching the precipice of something. And here comes Bitcoin. Bitcoin is the antidote to the fiat currency mess. It fixes that issue by giving people a sound money solution that they can hold their money in and not get robbed through inflation every single day. So what do you think hyper-Bitcoinization will look like, we'll say, for the rest of this decade and moving forward? How does it play through in your mind?
Yeah, I'm not one of the guys who thinks we're going to just march right into hyper-Bitcoinization where every single asset in the world is going to be measured in Bitcoin in the next 10 years. Could it happen? It's a non-zero probability. Absolutely. Probably higher than a non-zero probability. But I'm more along the lines of, I think that what's going to happen here, Ben, is that as people understand Bitcoin more and more, they're going to start using it as a store of value, much like gold was but much more efficient and much more trustworthy of a store of value over time. So I think that's really where it starts. And so we're going to go down one of two paths in my mind, where Bitcoin becomes augmented, where it's the store of value that people use across the world, much like they used to use bonds, and that it starts taking away bonds, bond investments, speculative investments in real estate, and people start using Bitcoin instead. So that's one thing. So it becomes this digital real estate that people use as the ultimate store of value. Then the other side of it is, what if we do have absolute chaos across the world and the dollar collapses and hyperinflates? Well, there's really no other currency for them to go into except for gold. There's no other hard money to go into. In that scenario, I could see Bitcoin taking over and having everything priced in Bitcoin. And that would enable that productivity miracle we're talking about, where we have massive deflation, which is good for everybody and everything. And that is possible with Bitcoin. How that happens over the course of how long is anybody's guess. But I think it's like when you change the back office system for a company, you don't just create the back office system and switch over to it. Like that opens you up to massive problems and failures. So instead, what you do is you run a parallel system with the current system for a while to make sure that it's working properly, and then you start switching over. And that's kind of the way I see and hope what will happen with Bitcoin, because that will cause the least damage and least pain for everybody across the world.
Yeah, absolutely. And I love that answer, because that's a bit more of a sober take than some of the Bitcoin Twitter folks out there. And I kind of bounce around a little bit. It depends on my mood of the day. Like if I'm just like hyper bullish, or if I think, we need to just going to be slow and steady and just kind of fingers crossed is not going to just rip everything apart here. Because there's so many things bursting at the seams. I would say something that everyone can agree on who studied this is that you just don't want to have zero. That's the anchor point. You need to get off zero, start buying, start accumulating, start building that Bitcoin savings account. Because like for me, it's just my savings account. It's the ultimate store of value to protect your wealth and the work that you put into the world. Like you said, like people are working out there and they're getting paid in monopoly toilet paper money that just loses value. So
it's going up against every single fiat currency in the world. And so over a long period of time, it's my belief that that will protect you, and that would be a great way to store your value. Yeah.
James, where can people go find your work and follow you?
Yeah, so we've talked about Twitter a bit. I'm just at James Lavish on Twitter, just like the handle says right here. And so that's one thing. The second thing is obviously we talked about my newsletter. It's called The Informationist. You can find that at jameslavish.com. It's on Substack. And then I run this hedge fund called the Bitcoin Opportunity Fund. It's for people who are high net worth investors who are accredited. This first fund is closed. We're not taking any more investors, but we'll likely have more funds in the near future. And so if you're interested in that and you're accredited, it's for people who they already have their core position in Bitcoin, but are looking for ways to augment that and to invest in the ecosystem as it grows. And so you can email us at Bitcoin at James at Bitcoin Opportunity Fund, or just go online to bitcoinopportunity.fund and we'll send you some info on it.
Excellent. I'm going to close things out here, James, with a quote from your pinned article from your Informationist newsletter that I really enjoyed. You said, "The bottom line, and what we have learned that is most important for each of us to understand after the last 2 years, is that it is absolutely inevitable. Fiat is backed by nothing. Our global financial system is built on debt and borrowing. Eventually, these debts get too big, even for the United States. The chickens will someday have to roost." I think that's a good way to close out, James. Mr.
Awesome.
Lavish, thank you so much for joining me today. It's been an absolute pleasure, and I look forward to keep in touch with you.
Yeah, you're welcome, Ben. It's been great to be here and talk to you, and I look forward to the next time.